Hello everyone, welcome to Bald Guy Money, and we start this video with a little sad news, and that is Michael Oliver, who appeared on my show back in April, is taking a break from social media and will limit his appearances on other shows as discussions around gold and silver, as well as some of his forecasts, have really turned toxic, with many people who discovered precious metals for the first time in late 2025 or January 2026 becoming extremely frustrated and publicly taking that frustration out on other people, including Mr. Oliver. Now, I have publicly disagreed with Mr. Oliver on his target of $300 silver in 2026, which he said could come as soon as summer of this year, but I have also said that we completely agree on the direction, which is what I think is most important, and it's why I issued this special statement on the gold and silver market this past week on X, formerly known as Twitter, arguing that what we're seeing now is much like what we saw during the 2008 gold and silver crash after they made epic runs starting in 2002. Continuing on to say that the bull case for gold and silver has not changed, and if you think they have, you're only fooling yourself, because what we're witnessing and have been witnessing since January 29th as the dollar was breaking key support on the US dollar index is a coordinated defense of the US dollar and US treasuries. That said, these methods of defense can only work temporarily because the fundamentals are telling us the structural issues have not changed. The Federal Reserve balance sheet just hit a new 52-week high, even though the financial news media told us Kevin Warsh was going to reduce the Fed balance sheet that tracks funny money creation. And global M2 money supply, measured by the world's four major central banks, surpassed $101 trillion for the first time ever in May. Now, in that statement I made on X, I alluded to the fact that I have also been the target of some of that frustration, and that's okay, despite the fact that I said this in a YouTube video on January 25th, only 4 days before the big correction in gold and silver prices. I am shifting my focus to the aggressive scenario I shared in that video with a new minimum target for gold at $7,500 an ounce and silver at $150 an ounce, both based on my analysis from last week's video, which I've incorporated here with a high possibility, mind you, of seeing a small correction before we reach those levels, which for gold may happen as it breaks into the low to mid 5,000s. And for silver, somewhere between $120 and $130 an ounce, which was the upper part of my conservative range and the previous lower part of my aggressive range. And the reason I mention that is to prepare you for that potential volatility and to not mistake a pause for a top. And although I admittedly underestimated the size of the correction, I want to make it clear that despite accusations of flip-flopping on my message, that I'm still looking for gold to turn around by the end of July and for silver to make its turnaround no later than September or October of this year. And I will reassess this position and consider new data, which is a perfectly normal thing to do after the July Federal Reserve meeting, as the market is currently giving a near 40% chance of seeing a rate hike in that meeting, a rate hike I remain extremely skeptical on, as President Trump himself has hinted at the fact that cuts may have to be pushed out to October as a consequence of the war with Iran, and to allow Kevin Warsh time to build a stronger case for those rate cuts, which is why I assume he wasn't so vocal about the Fed holding rates in the June meeting. So despite a slightly uncertain timeline that may need some revision, and again, we can revisit that timeline in July, in this video, I want to present the silver roadmap so many of you asked me to show you in the comments section of my last video. I want to discuss the situation for silver versus gold and show you all what I think the cycle peak will look like, how deep of a pullback to expect after we hit that peak, and what happens after that as we move into the 2030s, which is when I expect to see a major financial crisis caused by ballooning national debts. Now, before we get started, for those of you looking to buy gold and silver, and it's still a great time to DCA in my opinion, Summit Metals has great prices on well-known bullion products. They are A+ rated by the Better Business Bureau, and all Summit Metals products are authentic, eliminating the risk associated with buying from some online marketplaces. In addition to that, they offer easy stacking options for buyers on a schedule with their auto invest, and now you can even earn loyalty rewards on every purchase you make at Summit Metals. So check them out, and remember that new customers get 3 ounces of silver at spot with this silver starter pack, and I'll leave the link to this in the video description below. So jumping in, I started working on this silver roadmap after receiving this question from Judy Pix, who asked if silver has the potential to deliver larger gains than gold over the long term. And I thought it was a great question because where central banks have been driving the price of gold up, buying it and storing it in vaults as they slowly replace a portion of their US dollar reserves with gold in a process that started in 2010 after they got massively diluted by the Federal Reserve, who printed up tons of new dollars in the wake of the global financial crisis. The same is not really true for silver, because although we're seeing renewed investor interest in silver since gold's 2024 breakout that led to silver having its own breakout just last year, mind you, when it finally passed the $50 barrier for the first time ever, a lot of that demand and pressure on the price of silver, resulting in the supply deficits we hear about so often, is being caused by actual use of silver. And that's use in solar panels, electronic vehicles, consumer gadgets, and even bombs and missiles. And considering our current ability to recycle and reclaim that silver that is being used, which is limited, it means that silver is becoming more and more precious with each passing day as it gets used up. And that fact is perfectly reflected by the Royal Mint's estimates that of the 45 billion troy ounces of silver that have been mined in human history, only about 25 billion ounces remain with us today, whereas most of the gold mined is still with us. So, despite the natural gap in rarity between silver and gold, that gap is narrowing, and that is the argument for why silver may go up quicker than gold over the next 10 to 20 years. And it's a valid idea, but should be treated as speculation, not as a certainty. And it shouldn't stop you from buying gold, in my opinion, as it has historically been more stable and a more suitable asset for retirement. And I want to be perfectly clear on that before we carry on. And the reason I say that and why I want to place emphasis on this point is because as silver price rises, it is confronting a harsh reality. And that reality is demand for it, at least on the margins, is going to decrease, just as we saw with Pandora announcing a partial switch from silver to platinum-plated jewelry earlier this year. Now, let me be clear. Small things like this aren't enough to solve silver's supply deficit problem, and they're not enough to crash price back to $30 an ounce. But it does mean silver's sustained upside could be limited, and pullbacks can be and likely will be much deeper than pullbacks for gold. And instead of speculating on exactly how things are going to play out over the next 20 or even 30 years, which would be very difficult to do, I put together a roadmap of how I see silver developing over the next 10 years using the same approach that I took to gold, which you can see on the screen right now. Now, jumping into the situation for silver, and we start from this current cycle, looking at a silver price chart going all the way back to 2000. And as you can see here, I've drawn in the cycle topping process, which I suspect will happen in 2028, just like I said it would for gold, showing a retest of around $100 per ounce this year before we take that out and make a new high, which I also think will happen this year still, but it could happen early next year, let's see, followed by a move to the lower part of my target range at $150 an ounce before a retest of $120 an ounce and a final move to around $200 an ounce, which may end up being slightly higher or slightly lower. Now, moving over to this image, the red line I've drawn on the chart here shows how deep I expect the pullback for silver to be once we make that cycle top high. And you'll see that expectation is much deeper than the pullback I expect for gold, which is in line with past cycles, not just because the historic data tells us this should happen, but also driven by substitution of silver in some parts of the economy, which I expect to see more of as price nears that $200 per ounce level, triggering a pullback to the $90 to $100 per ounce area. That said, just like for gold, I expect a major rebound heading into the 2030s, mainly driven by what I expect to be a global debt crisis caused by government inability to meet their unfunded liabilities, which are all the big payments politicians across specifically the Western world, but not exclusive to, have promised to make in exchange for votes. And it starts with national pension programs like Social Security in the United States going bust, and even higher levels of inflation as new money is created to fill the holes, driving the price of silver to $250 and beyond, eventually, from my point of view, fulfilling Mr. Michael Oliver's call, just on a slightly longer timeline. Now, as we move over to the US government's numbers showing how Social Security will not be able to fully meet its obligations by 2032, which is not that many years away. We're in 2026 right now, so what is that? About 6 years away. I want to say that these figures, as well as the drivers, are all in line with what I have been presenting in my data for years now. And I understand not all of you have been watching me that long, as I started the channel back in 2021. And it's why some people who never saw the January 25th correction message that I showed at the start of the video think I'm just another pumper selling false hope for YouTube clicks. That said, despite some imperfections, my message remains as true today as it was when gold was $1,800 an ounce less than 3 years ago, and when gold was $5,600 an ounce just a few months ago. Gold and silver are important to own and important to make a part of your retirement planning, because promises that you will be taken care of in your old age are as good as the promise of a 2% target inflation rate. And in a world where tech companies come and go, remember BlackBerry and Peloton, for example, gold and silver will always be worth something when you need it to be. So with that said, that's all for this video. I thank you very much for making it to the end. Please remember that if you enjoyed the content, to leave a like below, as that lets the YouTube algorithm know that other people need to hear this message. Please also don't be shy. Share this with your friends and family if you think this is something they need to hear, as it helps my channel grow. And until the next time we see each other, everyone, I'm wishing you all a fantastic week ahead. Please remember to take care of yourselves and take care of each other. See you all in the next video. Goodbye.